Welcome to Retire Hustle. This is 100K profit with options trading series. I'm in week 10, day 85. Last week's profit was 937 and I'm in total 7,000 profit and 7% on my goal. I will post every weekend for the previous week's close and open trades together with my entry points, exit points, and the logics behind. I'm working, by the way, full-time as a corporate analyst in a tech company. I trade very conservatively, I would say. I don't touch to meme stocks, not gambling with 0 to 1 day expressions as well. Just small, safe, and consistent profits. That's my strategy. I really like options trading, how easy you can start with small accounts by following basically low risk statistics backup strategies. Of course, this is not a financial advice. I'm just sharing my experience as a hustler. All right, let's dive into some numbers and charts. Here is the dashboard. As you can see, I closed 56 trades in 85 days. My win rate is 100% at the moment. I don't think it's realistic to keep this always at 100, of course, but I really try to be safe as much as possible. You will see on the trade details when I show. My monthly average over little $2,000 per month, but I think I'm just getting started. This month alone, my number went above 3,000. On the left side, you can see my weekly trades. This week I closed 9 trades. My average weekly trade numbers around like 6 to 7 every week. Let me show you a cool thing, and I really like this coding and automation stuff. Like when I click any of these numbers, it will create a tab with details. I know I kind of nerd on this, so I'm clicking this 9 button here and it is refreshing my stocks here. So these are the 9 closed trades in last week. Most of my trades are credit spreads. Also, when I see an opportunity, I sell some cash secured puts or use some broken wings butterflies. Here you can see how long I'm staying on the trades. It's average 5 to 6 days, and my expirations are mostly around 30 to 40 days to be on the safe side. I don't prefer 0 to 1 days DTEs, as I mentioned. I also have 50% profit taker setup on my most of trades, so I exit immediately when it's triggered. I don't chase crazy profits and risks for my trades. Let me show you the logic I'm following on my trades. I will show some put credit spreads. For example, Intuit, I enter the trade on 14 and exit on 23. Let's check the chart so I can show you my entry points and exit points. Here's the chart in TradingView platform. These are my 3 favorite indicators, by the way: Bollinger Band, 200-day moving average, and RSI. You can see that most of the stocks move within these bands. It touches the upper band and bounces down and touches the down and goes up. RSI is also a great indicator. Most of the time I trade put credit spreads when the RSI went below 20 levels, where it means like oversold basically, and I use above 80 RSI levels to decide my exit points. So I entered this trade on 14. It was exactly here. Price was almost hitting to the lower band and RSI was below 20, and it also went below 200 moving average. That was just perfect setup. I sold the spread, collect the premium, and close when the price bounced to the upper band and RSI went to 880. Let me tell the logic behind of choosing the strike price in the spread. 600 level, as you can see in the past, multiple times act as a support level. So that's a good indicator that stock will stay above 600 by end of the expirations, and I will be able to keep the premium. And plus, from current price to 600 level, it's an almost 7% drop. And stock dropped a lot recently, as you can see here. So I thought another 7% drop is unlikely. That was my thought process basically while choosing this strike price in this trade. I also could go little above like 620 levels for more premium, but as I mentioned earlier, I want to be on the super safe side, and I got 8% ROI on this trade, and that's more than I need. Let's check quickly another put credit spread. I have here another put credit spread, which was DocuSign. I entered the trade on 20 October and I exit on 21. It was just 1 day trade. Let's check the chart. I entered to the trade right here on 20 October. RSI was around 20s and started to make an upward movement. Again, I made a 30 days expiration, but next day my fixed 50% profit taker got triggered. Stock made a 4% jump and my trade closed automatically with a $96 profit. As you can see, it filled on one and automatically sold and closed at 0.5. With 2 contracts, I got $96 profit. Lastly, QQQ was the other put credit spreads I traded last week. Let me show the graphics for that. Here I have entered on 14 October when the stock was touching almost to lower band and the RSI was around 40. For QQQ, 40 is kind of the lower end. It doesn't go 20 levels that often, and in a week it bounced back to upper band and above 80 RSI levels. That was the point I exit from the trade. $120 profit. In terms of my strike price again, I choose 560, way below the current price. It's on the 6 to 7% drop level. Delta was 10 to 15 to make sure being on the safe side. That was my put credit spreads for the past week. I had some cash secured puts also. Normally I don't trade stocks like SoFi, HIMS, Palantir, Robinhood. I found them a little too volatile for my taste, but this week I placed some short-term trades before earnings for some quick gains. Their graphics was too good to avoid. All dip into lower band territories, so I sold some puts on them and then collect the premium and exit next day. Let me show their graphics quickly. So for example, Robinhood on 22 October, right here, touched to lower band and RSI was around 220 and I entered trade on that day. Next day stock went up 4 to 5% and I exit immediately with $77 profit in 1 day. I didn't want to wait stock goes to upper band. Like I said, I don't feel safe on staying these kind of stocks. They can move 5 to 10% per day. Palantir was very similar. On 22 October it went down from the band and I entered to the trade and I exit next day. Again with around another $70 profit. In terms of strike price, here I choose 145. I'm choosing way before the current stock price, especially when I'm trading riskier stocks. 145 price from current 174s means like 20% drop almost on top of the current drop. That was my cushion to be on the safe side in a risky stock. I don't want to chase premiums on 150 or 160 levels. I'm okay with $6 to $70 profit. That was all from my closed trades of last week. I will show quickly my open trades. Here I have a tab with another cool Google Sheets extension I built where I can pull my all open trades. Here they are updated. Let's see, I think I opened 10 trades last week, mostly Friday and Monday. Again, I have put credit spreads and some call credit spreads. I can show a call credit spread actually as a different one. Here I opened this trade on Friday, ExxonMobil. Let's see the chart. Here's the chart. As you can see, stock is making that nice movement, touches above the band and bouncing back and touching the bottom and going up again. So on Friday, it went all the way to the upper band and RSI was above 70, and I decided to open call credit spreads since I'm expecting a little down trade after touching to the upper band. I have 30 days expiration date. I put my strike price well above the current stock price. I will be watching this one closely next week. Before or after earning, I'm planning to exit. I think I opened more call credit spreads in Pepsi and McDonald's. They had very similar setups. For example, McDonald's here went above 80 RSI and got close to upper band, and I opened the trade here on 20 October. It went already a little down. I'm already in profit on this. Probably next week I'm going out once it reach out to 50% profit. Pepsi was the same. On 20 October, right here, it went to above 90 RSI. I entered trade in that level. Again, I choose my strike price based on some previous support levels. I'm planning to close this one also this week. Let's go back to other open trades. Here I want to mention about a put option that I bought on Friday. Normally I sell options like 90% of time except leaps options, but this time I bought a put option on American Express. Let me show you the logic behind. Here's the graphic. You can see stock went up a lot after earning and it touched to upper band and RSI was above 90. I didn't want to open on call credit spread on this one like McDonald's and Pepsi I just showed, because American Express is a stock with a very upward trend stock. It doesn't move much sidelines in the band, and I don't like trading call credit spreads when the stock was in all-time high levels. And plus, if I put a higher, safer strike price here on top, like I'm doing with others, American Express doesn't pay much on premiums for those kind of safe plays with 10 to 15 delta. So what I did instead, I bought a put option with 35 days expiration again, right on the money here with 355 strike price. You know, at the money options are usually 40 to 45 delta. What is buying 45 delta put option means, in every $1 stock move to the downside, option will gain $45 profit. My exit plan is right here on 350 level. I'm not going to chase crazy profit on this because I believe American Express is a great stock and highly possible won't go down much. So that's why I will just wait 1 to 2% drop here around 350 levels. That means 7 points drop from the current price, and 7 points drop means 7 multiplied with 45 delta, it's about $300 gains. So that's my thought process on this trade. I will be checking that little pullback and I will immediately exit from this trade, hopefully next week. Let's check other open trades from last week. I opened another put credit spreads. Let me show you that as well. Here it's a very common put credit spreads play in O'Reilly Automotive on Friday. Again, stock went down to lower band, and this time I choose a closer strike price, as you can see, because my expiration was almost 60 days. So this one also one of the trades I will be checking on next week. So that was my newly opened trades from last week and my plans for next week. I have some leaps and broken wings butterfly trades, but I think I need more time to explain those. They're a little bit complex. But I hope you enjoy the content. Feel free to put your comments down below. Like I mentioned, I will upload weekly videos, hopefully on Sunday or Saturday, to give some updates on my close trades and the ones I open for the next week, together with their logic, of course. If you want to be part of my journey on making 100k profits with options trading, and if you are getting some value from this content, please consider liking the video and subscribing to the channel, of course. I'm planning to make more videos also about how to create online selling business or some other online income streams I'm currently doing. So content will be all about hustling. Anyway, good luck hustlers. See you next week.